Seriously undervalued stock. What's up investors and welcome back to the channel. Today I want to talk about Katapult Holdings. This stock is traded on the Nasdaq under the ticker Kplt. This company has had a roller coaster year from a starting point of $10 reaching as high as $20 before dropping to only $3. So today we'll be looking at who exactly Katapult Holdings are, what they do in their market. We will look at the investors presentation and look at the projections and total addressable market. I will look at the ownership structure and what major investment firms are backing this stock to be a winner. This is definitely worth staying around for. I will look at the most recent financials where I see something that most investors either do not see or do not realize the significance of. I will also look at insider trading, analyst price targets, potential for a short squeeze and much more, so stick around until the end. Before we get into the video, it takes a lot of time to do this research, so if you find any value in this video, can I ask you to smash that like button? It literally costs you nothing, but it helps me out so much. I'm aiming to get 200 likes on this video, help me make it happen. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. It's 100% free and a great way to show your support for the channel. And if you want free money, consider opening a WeBull trading account using my referral link. Deposit $100 and get 2 free shares worth up to $2,000. So what do you think of Katapult Holdings? Have you invested and what price target do you have? I want to point out that I'm not a financial advisor and this is not financial advice. Now let's get into it. Katapult Holdings is a company that provides non-prime customers with lease purchase option to enable them to obtain goods from its network of e-commerce merchants. In simple English, this is a buy now pay later company for those who may not be able to access traditional financing options. The company has developed a sophisticated end-to-end technology platform that enables seamless integration with merchants. Their cutting-edge technology integrates seamlessly into online platforms, enabling retail partners to expand their customer base, increase transactions, and grow revenue. And for consumers, their focus enables an efficient application and approval process while providing transparent, tailored payment terms. Catapult is becoming a leading lease purchase platform, providing alternative solutions for retailers and consumers, and Catapult associates with hundreds of retailers across the United States with merchant support teams, marketing insights, and suggestions for continued success. Basically, Catapult is providing lease purchase options for consumers who are struggling to access traditional financial products and who are seeking to obtain everyday goods. So they are offering short-term agreements that are flexible, no credit is required. They offer a 60-second application with instant approvals up to $3,500. Now Catapult has seen significant gains over the past few weeks, rising up from a low point of only $3.10 up to its current price of $6.38, which sees its current market cap being placed around $600 million. For those of you who do not know, Catapult went public through a SPAC merger in December, although this wasn't finalized until June, which valued the company at the time at approximately $1 billion. This rose to nearly $20 in February before all SPACs started to decline quickly, but I think this has now dropped into fantastic value at this current price. How much Catapult can make from every lease varies depending on customer situations. For someone who pays within 90 days, they will pay only 5%. But the company really makes its money on those who decide to spread the cost over the full length of the contract, with the charge being 100% on top for the full term cost of ownership and roughly about 60% on the mid-lease option. Considering the type of consumer that this type of company attracts, this is a very profitable business model. So stick around for when I take a look at the financials and we'll see just how good this really is. Looking at the investor presentation from December, we can see that the consumer spending on durable goods e-commerce market is predicted to rise to approximately $300 billion by 2023, with approximately 38% of US consumers underserved by prime credit products, with approximately 67% of those needing this type of pay over time financing options. So Catapult has a huge potential total addressable market, with less than 1% of that market currently captured by the company. And Catapult is currently the only non-prime consumer point-of-sale lease financing platform focused on e-commerce. While they currently have over 150 merchant partners, including the likes of PC Richard, Lenovo, and Wayfair. The company has revenue projections of 87% compound annual growth rate from 2019 to 2023 and offers superior growth rate to peers And as we can see here, they have an attractive entry valuation of only 2.2 times their projected 2022 revenue. Now at the time of this presentation, the entry valuation being put on the company was at a share price of $10 per share. But that also was assuming a certain level of compound annual growth rate being reached. The current price per share is only $6 per share, but we will look more at this in a minute when we look at the financials. Overall, I think that this company is fantastic value at its current price. One of the things that I've seen talked about this stock quite a lot recently is the possibility of a GameStop or Support.com type of short squeeze. And looking at MarketBeat, we can see that there is quite a sizable percentage of the float shorted at around 15.8%. And while we're here on MarketBeat, we can also see that this stock is currently rated as a buy, with the most recent price target being lowered from $12 to $7 by Loop Capital on the 12th of August. I consider this price target to severely underestimate the potential value of this stock. Looking at Simply Wall Street, we can see that they have set a fair value of $19.27 for Catapult, meaning that the current price is approximately 67% below fair value. The majority of the company is owned by institutions, insiders, private companies and investment firms, with the general public only owning about 24%. The largest shareholders are Kuro Asset Management and Finserv Holdings, who are the SPAC that brought the company public, while other notable shareholders include Morgan Stanley, Wells Fargo, Light Street Capital Management and Anchorage Capital Group. And something that I love to see with companies is insider trading, where management are heavily invested in the companies and actively buying shares. And we can see here that this has happened over the month of August, with several members of the executive management team purchasing shares. Now, let's look at the most recent financials. In my opinion, for this stock, this is probably the most important and also the most misunderstood facts about the company. These are released on the 16th of August when the share price was a little over $3. Looking at the balance sheet, we can see that Catapult has total assets of $190 million with total liabilities of $173 million. This gives Catapult a positive asset to liability ratio of about 1.1 to 1. But when we look closer at this, we can see that they have cash reserves of over $110 million and total current assets of $189 million, with their total current liabilities only amounting to $22 million. This gives Catapult a current ratio of about 9 to 1, which is actually fantastic. Their long-term liabilities mainly consist of a revolving line of credit, which in effect for this company is the business risk. Looking at the income statement, we can see that they have total revenue for the 3-month period of $77 million, giving a gross profit of 21. This gives a gross profit margin of just under 30%, which again is very, very good. The downside here is, after deducting the operating expenses, Catapult actually have a net loss before tax of nearly $10 million for the quarter, and a total net loss of $8.1 million. On the face of it, this is not great. Revenue has only increased about 20% on Q1 last year, and they've actually gone from a $5 million profit to an $8 million loss. But looking closer at the 6-month figures, we can see that revenue is actually up 50% on the first half of 2020, and the loss for the 6-month period is only about $1,000. Then we have this very interesting figure for compensation costs of $17 million for the 6-month period. Without this cost, profit would actually be increased nearly 100% on last year's profit figures, despite only a 50% increase in revenue. So let's take a closer look at this. Compensation costs increased by $12.9 million, or 720%, to $14.7 million for the 3 months ended June 30th, from $1.7 million for the same period of 2020. This increase is related to an increase in stock-based compensation related to the vesting of executive restricted stock awards of over $9 million as a result of the merger, payment of transaction-related employee bonuses in preparation of the merger, and added headcount to support the growth trajectory of the company. This is fairly common with SPAC stocks and tends to be a one-off. As we can see here on page 15, vesting of the award shares is contingent upon the recipient's continuous employment with the company through a liquidation event. The liquidation event represented a performance condition that was satisfied as a result of the merger. And as of June 30th, 2021, total compensation cost not yet recognized related to unvested stock options was only $59,000, which is expected to be recognized over a period of 1.82 years. So I expect Catapult's revenue to increase in the coming quarters and the coming years. But regardless of the level of increase, I feel that this company will be profitable either way, regardless of both the level of growth and the cost of that growth. The only real downsides to the business at the moment in my opinion, is that the majority of the business comes from just one merchant, being Wayfair, and the fact that in 2020, delinquencies were at record lows due to government stimulus for COVID relief. So before we look at the charts, let's look briefly at some recent news. First of all, Catapult is giving some very positive news at the moment with donations to the American Red Cross in support of the relief efforts of Louisiana and Mississippi. And Catapult is reaching out to its customers and retail partners located in the directly affected area to see how they can further support them during this difficult time. They aim to assist customers, retail partners and communities as they recover from the impacts of Hurricane Ida. And in the past few months, Catapult announced its partnership with Digital Storm. Digital Storm produces some of the fastest gaming computers in the market and has won numerous awards from industry publications like Maximum PC's Kick-Ass Award, PC Gamer's Editor's Choice Award, and PC Perspective's Gold Award, amongst others. And in some negative news, like a lot of stocks that went public over the past 18 months through SPACs, several law firms have initiated a class action lawsuit on behalf of investors who bought in at high prices. In this case, Bernstein law firm has filed a lawsuit on behalf of investors who purchased Kplt between December 18th and August 10th, alleging that senior executives made misleading statements to investors. So looking at the chart over the past year, we can see here in December where this had been trading at its SPAC price of $10 and began to rise on merger news and then continued to rise into February, reaching as high as over $19 before going on a steady downward slope all the way up until August. On August 10th, Kplt stock took a huge drop from nearly $10 to less than $3 in just 3 days. And when we look closer at this, we can see just how big of a drop that really was, wiping out about 2/3 of the company's valuation in the space of just 3 days. However, since that drop, we can see that the stock had found a base level of support between 3 and 350 before gapping up here on the 30th of August. And over the past week, this stock has gained significantly, gaining back more than 100% from that $3 low. And looking closer, we can see the stock has actually been rapidly rising in this upward channel, consistently hitting these lines of support and resistance. This is a very bullish chart in my opinion, and I see no reason for this not to continue in the coming weeks. So guys, that brings us to the end of the video. Before I give you my final thoughts, if you have watched all the way through, then hit that like button. It really helps the channel out a lot. And if you don't have a WeBull account, you can sign up using my referral link, deposit $100 and you will get 2 free stocks worth up to $2,000. Sell those stocks and buy what you really want. It's basically free money. If you're new to the channel, remember to hit that subscribe button and bell notification, follow me on Twitter and join the Facebook group. All links in the description below. So what do I think? I think this company is seriously undervalued right now. Let's remember that this is a company that went public at a pro forma valuation of $1 billion. The current valuation is only $600 million, and a lot of progress has been made over the past few months. Okay, so they had projected revenues that are higher than what they have actually achieved, and they have recorded a loss. But when we strip away the huge expense of the one-off compensation due to the merger, we find that this company is actually very profitable. And this, coupled with the fact that their revenue is still growing by about 50% over 2020 figures, and that they have only captured about 1% of the total addressable market, shows me that there is huge upside potential. Then we have huge institutions like Morgan Stanley investing in Kplt, and only in the past few weeks, the company's executives themselves have been buying up shares. These are the people who know more than most, and this is something that I like to watch closely. But most importantly, what do you think of Katapult Holdings? And what is your price target? Leave a comment down below. As I said before, I'm not a financial advisor and this is not financial advice. Thanks for watching the video. Catch you in the next one.